Good morning, traders. This is Perry Wilkie with StartupTrading.com. Let me double check. Oh, all right, very good. Sorry about that. Let's start over. Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 10 minutes till 9 a.m. Eastern Time on Wednesday, October 1st, uh, Q1, Q4 Day 1. So, looking back at yesterday's action, right? We were just consolidating down in the lower ends of value. We tested below the previous day's low on both the NASDAQ and the ES. And you can see that there was some poor structure there. And this is your first real signal, right? That you just, you had one, two, three, four, five, six, seven, uh, 30-minute bars during the day, right? And there's only 13 of them to start with that, tested below that auction level. And you can see how quickly uh, it was rejected, that we did not want to be anywhere within this auction that was below uh, those single prints. That's pretty textbook profile action. And then so another one that you could say is you kind of formed a poor low down here, and then you just moved away from it up into the close. And what did you do? You just tagged uh, the split in the auction for the S&P 500. So looking at the Qs again, uh, right around this 600 call wall, right? We got a little bit above it on Monday, tested a little bit above it on that wick into the close yesterday, and just still. So that's still the call wall is still at 600 for the Qs. Which means it's basically right around 24,000, uh, probably 877 today would be where that level is. Uh, Looking at where we are since we've rolled over uh, 2.5 weeks ago or whatever, we have been just up in this distribution, and now we're at 6703 is your point of control, and remember 67. I think it was '05, if I'm not mistaken. It's so basically 6700 to 6705 is really still your bogey line for where people probably have their stops below, and we'll see if we could force a little bit of poor structure. Eventually, we will start trading back down towards 6,400 again. That seems like a long ways away, but not really. Uh, and then as we look at where we are, we've been, up on this breakout above 24,275, and just really just sitting here consolidating. And a lot of times when you have a sharply uptrending market like we have since we made those swing lows earlier, you can get that consolidation by time because you got a little bit ahead of yourself. And then, if that's still the trend, then take your leg up. So we're kind of digesting here, I guess is what I'm saying. And it doesn't mean that we won't get a retest uh, lower later, but we don't have to. Your first sign is going to be this 24,275 if we start, closing dailies below there. And that's only about another 200 or I'm sorry, 500 points on the NQ lower than we are right now. That's not uh, that much, to be honest with you, uh, for where we could go. Looking at the overnight action, right? We're in value, we're in value, we're in value, we're in value. And then we have some clear signs uh, for structural issues on the ES from yesterday, right? We had pushed up last night, right? So it's a little bit of a bull trap potentially coming into the day for the first time in a while, right? So 67.16 through 67.26, that's your resistance above profile wise, and then you'd have to see if we get back down. So You really should not see if the bears are going to maintain control. You really shouldn't see unchanged in any of these indexes, especially the Nasdaq, right? Uh, so let's get into positioning. I'm going to open up the cash market. So we've got a roll, and we had the quarterly expiration yesterday, right? So if you pinch the cash market, you can see where the new uh, JPM collar is. So basically, uh, you know, between uh, 63.20 and 7,000, they just participate with the market. Above 7,000, no participation, right? But below 63.20 all the way down to 53.40, they suffer no losses on this hedge, right? They put this hedge on for free, uh, cost wise, but the cost is if you end up, uh, closing the quarter, which will be December 31st now, above 7,000. Once again, they're not going to participate to any upside. However, if you close the quarter December 31st below 63.20, they're not suffering any losses between there, basically for 1,000 points. So that's where they are. You can pinch down if you want to see where those markers are. Um, and then we'll go from there. So it would not be unusual for us to test this 63.20 at some point in time before then, uh, as well as at some point the 7,000. So those are your two markers for magnets, and they would normally happen within the next 4 to 5 weeks. So we'll more about that later if we get closer to any of them. Otherwise, it's just status quo. So the 1 day expected move for toss is just down at 67 47 half, and we closed it at 66.88. And so let's get back into looking at everything again. So we are down 28, basically 30 points in the overnight session. That's just because we hit, you had marked them up, and before the session even closed last night, we were, already retracing quite a bit as we were coming to that quarterly expiration. Remember, the options don't expire until 4:15, so they were just running it back down to make sure that they could buy Mama a new pair of shoes at some point in time before the end of the week. So as we look at where we're at, status quo is still going to be right around yesterday's low up to uh, 25,075. That's your status quo for the Nasdaq. Your status quo for the ES is basically right around 66.96 up to uh, 67.80 is where status quo is for trading ranges today. So can we actually put into something? Keep in mind that we are done now with large expirations. There's really not any catalyst. People can look to non-farm payroll as being a big deal, but it has not been a big deal as we have progressed through the last probably 14 months. We do get resets on them, meaning like when the news comes out, we might shift up or down a percent. Uh, Anywhere between 3/4% to 1.5%, but just kind of idle there the rest of the day within a range. So it hasn't been the start of a trending day for a while. Maybe this week will be different. We'll have to see, but we could get some structure coming into the end of the week now that we've got this large expiration behind us as of yesterday. So your main wall is still 600 to the upside, and then you've got to the downside. You're still looking uh, quite a bit lower that you could go. So we'll just see where it is, but until we get out of status quo, let's assume that it is going to be status quo today, and then we'll see what we get. You can see again we were rejected underneath the 1 day expected move as after we got back into range. that one day expected move low held. It doesn't mean we're going to test the high, but we could actually hit these large gammas again. What I would like to see first is if the Qs can make any progress above 599. Um, and then there is room today to get up close to 605 to the upside uh, if we do get there. But your easiest bet's going to be, remember, you should not see unchanged in the ES, and you really shouldn't see any traction above 67.26. If you start seeing holds above there, you could get, a run back up towards that call wall, and then you could just get a stop run again. Otherwise, I'm going to watch see if we get that first 30-minute drive and see if we can put in some excess one way or the other. So you have to really watch the 3-bar pattern between 9:30 and 11 o'clock when that forms to see if you've formed excess from that first 30 minutes, right? You can't really see if you formed that excess until right around 11 o'clock. So I hope this helps. We'll see what Jack's looking at next, but keep in mind we could get a trending day to day, uh, and it might not be as two-sided. It doesn't mean it's going to have to be trending, but the potential is there now that we've had that large quarterly expiration behind us yesterday. Have a great day. Trade safe.